SpaceX has officially gone public. And if you open social media right now, you'll see the same message everywhere. This is history. This is the future. This is the next trillion-dollar company. This is your chance to get in early. Maybe. But whenever I hear people say, this is your chance, I immediately start asking a different question. Whose chance? Because on Wall Street, those are often very different things. You see, whenever a stock becomes the most exciting investment story in America, somebody is buying, and somebody is selling. The buyers get the headlines. The sellers get the money. And right now, almost everyone is talking about the first group. Almost nobody is talking about the second. Now, I know that sounds dramatic, so let me earn it, because this isn't a video about SpaceX being a bad company. Quite the opposite. By almost any measure, SpaceX is one of the most extraordinary companies ever built. It launches more rockets than entire nations. It completely changed the economics of spaceflight. Its satellites connect places traditional infrastructure never reached. Governments depend on it. Businesses depend on it. Entire industries increasingly depend on it. If you came here expecting someone to tell you that the rockets won't fly, that's not what this is. This is about something different, and in a way, something much more important. It's about the difference between a great company and a great investment, because those are not the same thing, and the gap between them is where ordinary investors often lose money. Not because they picked the wrong company, because they paid the wrong price for the right story. And right now, SpaceX might be the biggest story in the entire market. Let's start with what everybody already knows. SpaceX wins. That sounds simplistic, but it's true. The company launches more rockets than any private competitor. Its reusable rocket technology changed the industry. Its launch cadence would have sounded impossible 20 years ago. Meanwhile, Starlink keeps expanding. Remote villages, ships, commercial airlines, military operations, entire regions with limited internet access. Millions of customers, growing revenue, growing influence. And then there's Elon Musk. Love him or hate him, he might be the most powerful business storyteller of the modern era. People don't simply invest in his companies, they invest in the future he describes. A future of autonomous systems, artificial intelligence, unlimited energy, space exploration, and eventually, Mars. Put all of that together, and you get something incredibly powerful. A company with execution, a founder with vision, and a story that feels bigger than business itself. That's why investors are excited. But here's the problem. Stories can become so powerful that people stop asking what they're paying for them. And that's where things become dangerous. Because investors aren't buying today's SpaceX, they're buying tomorrow's SpaceX. 5 years from now SpaceX, 10 years from now SpaceX, maybe even 20 years from now SpaceX. And once investors start paying for the future becomes very expensive. Here's a simple question. What exactly are investors buying? Most people answer immediately, a rocket company. But that's not really true anymore. If SpaceX were only a rocket company, its valuation would be dramatically lower. The market isn't pricing one business, it's pricing 5 futures simultaneously, and every one of those futures has to work. Future number 1, launch dominance. This story already exists. The rockets fly, customers arrive, contracts keep coming. This is the easiest future to believe. But here's the catch. Everyone already believes it, and investors don't get rewarded for buying obvious information. They get rewarded when reality exceeds expectations, not when it simply meets them. Future number 2, Starlink. And this might be even bigger, because Starlink isn't being valued as a satellite project. It's being valued as a communications empire, an internet company, a subscription business, a recurring revenue machine, a future infrastructure giant. If Starlink reaches its full potential, it could eventually be worth hundreds of billions by itself, maybe more. But notice something important. That entire sentence depends on one word, if. And markets have a strange habit. During periods of excitement, they start treating if as certainty. History suggests that's dangerous. Future number 3, defense. And this is where things become very interesting. Governments increasingly view space as critical infrastructure. Communications, navigation, security, intelligence, national defense. And SpaceX sits right in the middle of that trend, which means investors aren't only buying commercial growth, they're buying future government spending, future contracts, future partnerships, future influence. Again, they're paying for a future that hasn't arrived yet. Future number 4. Infrastructure. Many investors no longer see SpaceX as an aerospace company. They see something larger, a platform, a utility, a foundational layer of the global economy. The same way railroads mattered, the same way telecommunications networks mattered, the same way cloud computing matters today. And companies like that deserve premium valuations. The problem is that premiums can become excessive, especially when everybody agrees. Future number 5. Mars. And whether investors admit it or not, Mars affects the valuation. Not because Mars generates revenue, not because Mars has a business model, but because Mars represents unlimited possibility. And unlimited purpose is very easy to overvalue. Because once imagination becomes part of valuation, you can justify almost any price, as long as you're allowed to imagine a future far enough away. And that's exactly what markets tend to do. So now we have 5 futures: launches, Starlink, defense, infrastructure, Mars. And investors aren't simply hoping these futures happen, they're paying as if they already have. That's a very important difference. But here's something almost nobody talks about. Even if all 5 futures eventually become reality, that still doesn't mean investors make money. And to understand why, we need to talk about something much bigger. Because the hardest part of SpaceX may not be building rockets, it may be building the future investors are already paying for. Because here's the uncomfortable truth. The version of SpaceX that investors are valuing doesn't fully exist yet. Falcon 9 exists. It's proven, reliable, profitable. But Falcon 9 isn't what creates trillion-dollar dreams. Starship does. Because without Starship, Mars doesn't happen. Point-to-point global transportation doesn't happen. Massive orbital infrastructure doesn't happen. Cheap lunar missions don't happen. And perhaps most importantly, maintaining tens of thousands of satellites becomes much harder. In other words, the biggest dreams surrounding SpaceX depend on technologies that are still being developed. Not failed, not impossible, just unfinished. And that's an important distinction. Because history rewards companies that execute, but markets often reward companies before execution. Which means investors can sometimes celebrate long before reality arrives. And the further away that reality becomes, the harder it is to know what it's actually worth. After all, how do you value Mars? How do you value an industry that doesn't exist yet? How do you assign a price to possibilities? The answer is, nobody really knows. Which means assumptions begin replacing numbers, stories begin replacing certainty, and eventually, belief starts becoming part of the valuation itself. Now, maybe that's justified. Maybe SpaceX really will become the most important company of the 21st century. Maybe Starship works exactly as planned. Maybe Mars becomes humanity's next frontier. Maybe everything succeeds. But investing has never been about asking whether something is possible. It's about asking how much success is already priced in. Because there's something Wall Street understands better than almost anyone. A great story can create extraordinary wealth, but it can also create extraordinary expectations. And expectations have destroyed more investors than bad businesses ever did. Now let's talk about something nobody likes discussing: demand. Because demand is where money gets made. Wall Street doesn't need SpaceX to fail. It doesn't even need SpaceX to struggle. It only needs investors to believe, because belief creates demand. Demand creates liquidity, and liquidity creates exits. Think about who owned SpaceX before today. Early employees, venture capital firms, private investors, institutional backers. People who invested years ago, sometimes more than 2 decades ago. Many of them bought shares at valuations that look tiny compared to today. That's not criticism, that's investing. That's how the game works, but it creates a very important dynamic. Because eventually, paper wealth becomes real wealth only when somebody buys. And who usually becomes the buyer? The public. That's why great stories matter. Great stories attract attention. Attention attracts buyers. Buyers create liquidity, and liquidity creates exits. The story doesn't have to be fake. In fact, the strongest stories are usually true, at least partially. That's what makes them powerful. And SpaceX might have the strongest story in the entire market. A revolutionary company, a legendary founder, a mission larger than profits. Investors love stories like that. Wall Street knows investors love stories like that. And when everybody loves the same story, valuation often becomes secondary. That's when expectations start becoming dangerous, because history has seen this movie before, many times. The funny thing about bubbles is that they're usually built around something real. Railroads were real, radio was real, the internet was real, artificial intelligence is real, and maybe SpaceX is real too. The problem isn't the technology, the problem is what investors do with it. Because history's cruelest lesson is this: being right about the future doesn't necessarily mean you're right about the price. The Railroad Revolution. In the 19th century, railroads transformed America. Goods moved faster, cities expanded, entire industries were born, and investors couldn't get enough. Capital flooded into railroad companies. Everyone wanted exposure. Everyone wanted the future. And they were right. Railroads changed civilization. But many railroad investors still lost fortunes because too much money chased the same dream, too much optimism, too many expectations, too high a price. The future arrived. The returns didn't. The radio craze. Then came radio. In the 1920s, Radio Corporation of America became one of the hottest stocks in America. People believed radio would reshape communication forever, and they were right. Radio changed everything, but investors became obsessed. Valuations exploded. Excitement replaced analysis. Eventually, reality couldn't keep up with expectations, and fortunes disappeared. Again, the technology succeeded, the investors didn't. The dot-com bubble. Then came the internet. Maybe the greatest technological revolution of modern history, and investors were absolutely correct. The internet transformed the world. Amazon survived. Google emerged. Entire industries changed forever. But in 1999, people stopped asking how much they were paying, because everyone believed growth would solve everything, until suddenly, it didn't. Trillions of dollars vanished, not because the internet was fake, because expectations were detached from reality. And perhaps the strangest part? Many of the original predictions were right. They just arrived later, at much lower prices. Let's talk about Cisco. One of the most important technology companies ever built. The internet exploded. Networking became essential. Everything happened exactly as people expected. Cisco won. The thesis was right. The future arrived. And yet, investors who bought near the peak had to wait over a decade just to break even. Think about that. The company succeeded, but the stock didn't. Because those are two completely different things. People love talking about Amazon today. And for good reason. It became one of the greatest companies ever created. Cloud computing, e-commerce, logistics, artificial intelligence. Amazon transformed everything. But here's the part people forget. After the dot-com crash, Amazon stock lost more than 90% of its value. 90%. Imagine being completely right about the company and still losing almost everything. Because timing matters, valuation matters, expectations matter. Sometimes being early feels exactly like being wrong. Then came Tesla. And perhaps this comparison makes people uncomfortable, because Tesla changed the auto industry forever, just like SpaceX changed space. The company succeeded, the mission succeeded, but expectations often moved much faster than reality. And every time that happened, investors learned how painful valuation could become. Notice the pattern. Great companies create great expectations. Great expectations create great risk. Not business risk, valuation risk. And valuation risk is dangerous because it feels invisible. Everything looks perfect. Revenue grows. Customers arrive. The future looks bright. And then the stock falls anyway. Not because reality became worse, because expectations became too high. But SpaceX has something that all those companies didn't. Something even more powerful. And maybe something even more dangerous. Elon Musk. There may be something else inside SpaceX's valuation. Not rockets, not satellites, not Mars. Elon Musk himself. Because for almost 20 years, investors have learned something unusual. Betting against Elon Musk has been expensive. People laughed at Tesla. Tesla survived. People doubted reusable rockets. SpaceX survived. People mocked Starlink. Starlink survived. Again and again, the impossible became normal. And eventually, that creates something fascinating. People stop valuing businesses and start valuing belief. Because if Elon Musk says something sounds impossible, investors increasingly assume that's temporary. And if history keeps rewarding that assumption, confidence slowly becomes faith. Faith becomes conviction. Conviction becomes valuation. And that's where things get dangerous. Not because Musk isn't extraordinary. Maybe he is. Not because SpaceX can't succeed. Maybe it will. But because history shows something interesting. Charisma creates premiums. And premiums can disappear faster than people expect. We've seen it before. Steve Jobs, Jack Welch, Masayoshi Son. Visionary leaders are powerful, but eventually, no founder is bigger than expectations, not even Elon Musk. Because markets have a strange habit. They forgive failure, they forgive delays, they forgive recessions, but they rarely forgive expectations that become impossible to satisfy. And that brings us to the most dangerous word in investing. Not bankruptcy, not competition, not recession, not regulation. A much simpler word: expectations. Most people think the biggest risk in investing is failure. It isn't. The most dangerous word in investing is expectations. Because expectations can quietly detach from reality, and once that happens, even extraordinary businesses become dangerous investments. That's what makes valuation risk so difficult, because nothing looks wrong. The company is winning, revenue is growing, the future looks bright, everyone is optimistic, everything feels perfect. And then, the stock falls anyway, not because reality became worse, because expectations became too high. That's the part people struggle to understand. Markets don't reward good companies, they reward outcomes that exceed expectations. And sometimes, great companies become victims of their own success, because success attracts attention. Attention attracts capital. Capital attracts optimism, and optimism raises expectations. Eventually, the company isn't competing against competitors anymore. It's competing against dreams, and dreams are difficult to satisfy. This sounds backwards. But some of the worst investments in history started as some of the best companies. Because nobody fights over mediocre businesses. Nobody develops FOMO over average stories. Nobody rushes to buy boring companies. But great companies? Everybody wants those. And when everybody wants the same thing, prices stop reflecting reality. They start reflecting emotion, excitement, optimism, greed, fear of missing out. The company itself doesn't change. The investors do. And that's what makes great companies dangerous. The better the company becomes, the easier it becomes to justify paying too much. Eventually, the story becomes so attractive, nobody wants to ask uncomfortable questions. Questions like, how much growth is already priced in? How much success is already expected? How much future performance is already reflected in today's valuation? Because every investment eventually becomes a comparison, not between success and failure, but between expectations and reality. And maybe that's the hardest part. Because nobody wants to miss the next Amazon. Nobody wants to miss the next Tesla. Nobody wants to be the person who said, I should have bought earlier. So people chase certainty. They want the obvious winner, the company everyone agrees on, the company with the strongest story. But markets have a strange sense of humor. The more obvious something becomes, the less attractive it often becomes as an investment. Because certainty has a price, and that price is usually optimism. The irony is almost cruel. The companies people feel safest buying are often the ones carrying the highest expectations. And expectations can be brutal. Because markets don't care how excited people are, they only care about surprises. And once everyone expects greatness, greatness itself is no longer enough. Now let's look forward. Forget Mars for a moment. Forget social media. Forget the headlines. What does SpaceX actually need to accomplish from here? First, Starlink growth. Not just growth, growth that exceeds expectations. Second, launch expansion. Not just more launches than investors already anticipate. Third, profitability. Because eventually every great story must become a great business. Fourth, continued technological leadership. Because competitors aren't standing still. Blue Origin, Rocket Lab, China, Europe. Entire governments are investing billions. SpaceX still leads, but leadership is something companies must defend, not something they own forever. Fifth, government and defense expansion. Because many investors are already assuming those opportunities become reality. And finally, Starship. Because Starship isn't just another rocket, it's the foundation underneath almost every long-term dream. Mars, global transportation, massive orbital infrastructure, a new space economy. Everything depends on Starship. Notice something. Every one of these requirements sounds reasonable. None of them sound impossible. But together, they create an incredibly high standard. And that's what premium valuations do. They raise the bar. The company isn't being asked to succeed. It's being asked to exceed enormous expectations. And that's much harder. Imagine SpaceX doubles revenue. Sounds incredible. But what if investors expected triple? Imagine Starlink dominates, but not as quickly as analysts forecast. Imagine defense contracts expand, but slower than Wall Street models assumed. Imagine Mars remains 20 years away, for another 20 years. None of those outcomes represent failure. The company would still be winning, the mission would still be alive. And yet, investors could still be disappointed. Because disappointment isn't measured against reality, it's measured against expectations. Most investors are asking, is SpaceX a great company? That's the wrong question. The real question is, how much greatness is already priced in? Because once expectations become large enough, even excellence can disappoint. That's the trap. Not weak technology, expectations. Not bad management, expectations. Not competition, expectations. The company can do everything right, and the stock can still struggle. History proves this over and over again. That's why the smartest investors don't just analyze businesses, they analyze assumptions, they analyze expectations, they analyze what must happen for today's price to make sense. Because that's where risk actually lives. Not in the headlines, not in the story, not in the dream, but in the assumptions behind the dream. And maybe that's the most important lesson in this entire video. Because this video was never really about SpaceX. It isn't about Elon Musk. It isn't about rockets. It isn't about Mars. It's about a habit very few investors develop. The habit of examining expectations before excitement. The habit of questioning assumptions before narratives. The habit of asking what must happen for today's price to make sense. Because that's where investing begins, not with hype, not with headlines, not with social media, but with expectations. The loudest thing in markets is usually the story. The quietest thing is usually the valuation. And over the long run, the quiet things matter most. The people who chase excitement get the headlines. The people who wait for evidence get the returns. And those are rarely the same people. The strange thing about markets is that they don't reward the best stories. They reward the difference between expectations and reality. And that's why some of the greatest companies ever built have also produced some of the most painful investments. Because investing isn't a competition between good companies and bad companies. It's a competition between what happens and what people already expect to happen. SpaceX may very well change the future. It may dominate launch services. It may turn Starlink into a global utility. It may become the backbone of national defense. And perhaps one day, it may even help humanity reach Mars. None of that sounds impossible anymore, but history has taught us something uncomfortable. The future can arrive, and investors can still lose money. Because sometimes, the greatest risk isn't betting on the wrong company, it's paying tomorrow's price for a dream that still belongs to tomorrow. History has a strange way of rewarding patience, and patience becomes hardest precisely when the story feels impossible to ignore. That's usually when it matters most, because Wall Street never asks whether the dream is beautiful. It asks something much simpler. How much of that dream have you already paid for? And that makes all the difference. I'll see you in the next one.